If you're losing money with trend lines, it's not because trend lines don't work. It's because you're using them the wrong way. Most beginner traders draw random lines on random timeframes, then blame the market when the trade fails. Today, I'll show you the professional way to trade trend lines using multiple timeframe confirmation, so you stop guessing and start trading with structure. Here's what struggling traders do. They open a 5-minute chart, they draw a line, they wait for price to touch it, and they enter. No higher timeframe bias, no confirmation, no structure. And then they say, trend lines don't work. The truth? Trend lines only work in trending markets, and only when aligned with higher timeframe direction. Let me simplify this. Trendline trading is not a guessing strategy. It's a continuation strategy. You trade with the dominant trend, not against it. And the dominant trend is never determined on a 5-minute chart. Professionals start with structure. Go to the daily chart. Not 1 minute, not 15-minute, daily. Ask one simple question. Are we making higher highs and higher lows, or lower highs and lower lows? If yes, you have a trend. If not, you are in a range. And trend lines do not belong in range markets. If the market is ranging, stand aside. This alone will save most beginners money. If the daily trend is bullish, you only look for bullish breakouts. If the daily trend is bearish, you only look for bearish breakdowns. You do not trade counter-trend breaks. That's where beginners get trapped. Now move to the 4-hour time frame. You are not looking for a new trend. You are looking for a correction. Let the market pull back against the main daily direction. That pullback is where your opportunity lives. In a bullish daily trend, connect the lower highs of the correction. In a bearish daily trend, connect the higher lows of the correction. This trend line represents temporary counter momentum. Now you wait. No guessing, no early entries, no forcing trades. This is where patience separates amateurs from professionals. You do not enter because price touches the line. You wait for 3 things. Number 1, a clear break of the trend line. Number 2, a break of recent structure in your direction. Number 3, preferably strong rejection or a double bottom pattern. If the daily is bullish, you want pullback, structure formation, trend line break upward, then break of the swing high. That is confirmation. Anything less is low probability. Do not trade in ranging markets against the daily trend before structure breaks, without confirmation, or because you are impatient. Trend lines require discipline. If you cannot wait, do not use this strategy. Most traders lose because they trade lower time frame noise, ignore higher time frame bias, enter before confirmation, trade inside consolidation, force trades out of boredom. Trend lines are simple, but simplicity requires discipline. Before entering, ask yourself, is the daily trending? Am I trading with that direction? Is this a correction on the 4-hour chart? Has the correction trend line broken? Has structure broken in my favor? If all 5 answers are yes, now you have a structured trade. Now you have probability. Now you are thinking like a professional.